is the supply chain, Grey Swan, where we say that all supply chain issues disappear this year. So I think that's an interesting one. Already we've seen some recent PMI data that's come out, which shows that some of the delivery times are starting to ease up. And that could be interesting over the course of this year, where we've had such a big focus on supply chains, but maybe this year it starts to go away. And the reason for this is that there's been a lot of adaptation to supply chain issues and inventory building into the end of last year. And at the same time, we could see some softening in demand over the course of this year, which then leads to the whole supply-demand imbalance starting to disappear. So I think that's very much kind of on the cards and may not even be a Grey Swan for this year. So that's one I'm focusing on. And the other one, which is at this stage not really a base case, but I think still is something we should focus on, is a US recession. And that is based on the fact that whenever the Fed hikes rates, and on top of that, if you do have a steep rise in oil prices, that almost always leads to a recession. Yet at the same time, people aren't really expecting much risk of a recession this year. So those are the two I'm most focused on in terms of the list that we have.
Bilal, both of them indicate a policy mistake, though, and this is a fascinating point in time to bring it up, given that we've had a very huge reaction on markets to the Fed minutes, where we're now looking at 3 rate hikes. If you're saying supply chain could get fixed this year, that could take out some of the pressure on inflation. And if you're also indicating recession, it means that we're very wrong on the bond markets, on the curve we're watching. So just walk us through that.
Yes, absolutely. And I think the main issue here is that the Fed has been slow at each point of this cycle so far. So, at the beginning of last year, it was neglecting inflationary pressures and said there was nothing to see here. And now, just as inflation has reached extremely high levels, now it's turned the ship around. This year's interesting that even, the Fed's forecast itself and also consensus, almost everybody's expecting inflation to fall this year rather than continue to rise. And so we have this issue where the Fed is tending to lag developments on the global economy side. And so, we could see that rather than the Fed being behind the curve in terms of taming inflation, it could be behind the curve in terms of dealing with recessionary risks. And I think the issue here is that it takes time for the Fed to turn the ship around. So it spent a long time talking about transitory inflation, which turned out not to be correct in terms of its own evaluation of it. And now that it's pivoted and it's doubling down on this, as we saw from the Fed minutes yesterday, it'll be hard for them to turn around, even if inflation starts to fall and even if growth starts to fall. And so I think this is likely to be the big story for Q1 of this year.